What's up guys, it's Matt. In this video, we'll be starting a new series of where I dive into the psychological aspect of trading, which I personally believe is one of the most underrated concepts when it comes to becoming a trader. And so in this one, we'll be starting off with fear. And so if at any point in time you find this video helpful or insightful, please drop a like and subscribe to this channel. So the reason why I started off with fear is because I believe this is one of the most common emotional responses that many traders have, especially as beginners when they're new to trading. And so fear is usually directly correlated with losing any sort of money. So many of us, if not all of us, get into the markets and start trading because we wish to make money, right? And so if you're someone who's just starting off and you're simply risking money that you can't afford to lose, so maybe this is hard-earned money from a hard-working job that you might have saved up for over a couple of months. Perhaps this is even a loan that you might have taken from friends or family. Well, in this case, you have way more pressure to make it as a trader. And therefore, if you feel more pressured, anytime that you might encounter any sort of loss, this will automatically induce a greater feeling of fear. And so as a quick recap, let's remember that it's a big mistake to trade money that you simply can't afford to lose. And that's because you'll have more pressure put on you as a beginner trader. And so if you took out a loan, maybe you're looking to pay back that loan because you promised that you would pay it back, or maybe you expected to pay it back within a couple of weeks or a few months, or maybe it helps support your family. And so now you expect to make a certain amount of money because otherwise this might affect your lifestyle if you do lose any money. Now, the second point that we can touch up on is simply having an unrealistic expectation when it comes to becoming a trader. So maybe you saw a marketing ad as a beginner where you saw someone flashing a brand new purple Lamborghini, or maybe they were showing you all of the gains that they made within a certain week. They might have simply hypnotized you into believing the fact that you can make 10,000 or 1,000% gains each and every day consistently for as long as you live. So maybe you approach the market with this type of belief, and after experiencing a losing streak or a certain amount of losses, now this feeling of fear starts to set in. And so at this point, you might start severely questioning yourself and your trading abilities. So you might question things like, how is this person who I'm looking at online able to make consistent and profitable gains each and every day without experiencing any type of losses or losing streaks? And how are they able to afford this lifestyle? And so at this point, what this usually ties into is not only does fear tie into having more pressure as a trader, but at this point, your confidence might start to go down. And so usually if someone is incredibly fearful, they might even have less confidence than they did when they first started off trading. Now, the third point that we'll get into when it comes to feeling fear as a trader is simply not following a trusted, back-tested trading strategy. And so this ties into an important point, which I actually covered in a previous video, and that's the law of probability. So in this case, this could actually tie into point 2 as well. And so the reason why probability is important is because the reality of trading is that you will encounter some type of losing streak eventually. And so therefore, if you're following a trading strategy that you don't trust, so maybe it's not your own trading strategy, maybe you're part of a signals group, or you're trading based on what your friend is telling you or what some stranger online is telling you, well, keep in mind that to them, they're not risking their own money, therefore they're not going to feel the feelings of fear, whereas you're risking your own money. And so this is why this is something that needs to be trusted as well as back-tested. And the reason why I say back-tested is because you won't know if a trading strategy has any form of a profitable long-term edge without doing any sort of back-testing. And so back-testing and having trust in your system tie in together quite well. And that's because if you haven't back-tested something and you don't know how profitable a trading strategy can maybe be in the future, so maybe you don't know what the long-term winning percentage is, maybe you don't know what the average risk to reward ratio is, well then in this case, how can you trust taking any form of a trade, right? If you're simply blindly taking any type of trade without exactly knowing what you're doing and not having any form of a trading plan. So I'll write this down, having a solid trading plan. Well, if you don't have this, well, then how can you trust putting your money on the line and taking a trade and not feeling the feeling of fear, which ties into the feeling of being uncertain about the situation, right? As humans, we don't like situations that pretty much put us at ease or have any sort of weird gut feeling that's given to us. So the feeling of uncertainty. And now the fourth point that I want to cover is having fear from past trading experiences. And I personally think that this is a very interesting point, and that's due to the fact that let's say that you have a trader who is not risking money that they can't afford to lose. So maybe they are risking only 1% per trade. So they're following proper risk management, and maybe they've been trading for, at this point, a couple of months or a few years. They understand the law of probability. They do have a trusted, back-tested trading strategy that they've extensively gone through, but they still might experience the feeling of fear. Now, why is that? Well, it's due to the fact that they experienced something traumatic in the past when it comes to trading. So maybe they encountered a horrible losing streak that wiped out their entire account or multiple accounts. And so now this lives in the back of their subconscious. So as much as they might tell themselves that they will take the next trade, when they do see a probable trading opportunity, they won't take it. And that's simply due to the fact that they don't want to experience past feeling of encountering a loss. And this ties into the feeling of pain. So it's not physical pain, but it's simply psychological pain. And fear is a form of psychological pain that you simply cannot get rid of unless you confront it. So this is similar to, let's say, someone who, as a child, they encountered perhaps a neighbor's dog that ran up to them and it bit their hand. Well, at this point, they might have a fear of dogs that lives within them for their entire life, simply due to the fact that they experienced this as a child and it traumatized them at the time. And so until they confront another dog and understand that just because they got bit by a dog in the past, that doesn't mean that every single dog is going to be aggressive and it's going to bite you. Until they do this, they're simply going to live with this inside of them essentially forever. Now, the last point that I quickly want to mention is the fear of missing out on trades, also known as FOMO. Now, there's a few reasons why this happens, with the first tying back into the first point, which is that you might feel some pressure when it comes to making it as a trader. Well, then you will have pressure of where you might not want to miss out on any given trading opportunity, even if it's not a great trading opportunity. And so this is where a lot of traders will commonly chase the markets, meaning that they might be entering a trade that's essentially too late and has already played out, but they're entering because they fear as though if they don't enter, that they won't make the gains that other people have already made. So this might tie into hype, which is pretty common in something like the crypto market. And so this is where some traders will look and say, oh, if this person made a lot of money, then I will buy this token, or I will take this trade, even though at this point the trend might be too late. And so this is where a common mistake is buying near the top or selling near the low. Or maybe if you bought near the top because at this point you expected the trend to continue, even though it was approaching maybe a supply zone where a lot of top traders were looking to sell, well, at this point you would experience a loss. And part of this actually ties into human nature. So as humans, we like trends. And the reason for that is that if you see other people and they're following a certain trend, well, then you might feel safe and you will want to mimic and participate in this trend. And so this applies to the markets, because as the markets are trending and they're pushing to the upside and a move becomes incredibly obvious within a trend, well, at this point you might feel safer and you might feel as though this is a situation that's certain, even though the exact opposite is actually true, where if a trend has been playing out for a long period of time without any sort of massive correction, well, then this is typically where the corrections occur. And so if a move is too obvious and you're buying into the crowd effect, well, then in this case, you will be entering a trade based on FOMO. So now let's quickly go over some potential solutions that can help reduce your feelings of fear for all of these points. First, let's begin with the feeling of fear when you're trading money that you can't afford to lose. So as I mentioned before, you want to have proper risk management. So if you're someone who's just starting off, maybe you should trade a demo account or a paper trading account. So at this point, you're not putting real money on the line, especially money that you might have borrowed. And for the second point, you need to have a realistic expectation with trading. So understand that perhaps for your first couple of months or maybe the first couple of years, in many cases, you won't make the gains that you expect to make. So you might not become a millionaire right away, or even if in the long run you're trading and it doesn't work out, you have to have the expectation that this is something that shouldn't put too much pressure on your life. So if it doesn't work out, well, then maybe something else in your life will work out. And this also, again, ties into understanding the law of probability, which means that we can't predict when we're going to encounter a losing streak as well as when we're going to encounter winning streaks. So the only thing that we can control is how much money we're willing to risk. And remember that you need to follow your own trusted, back-tested strategy. And so if you're someone who's new to trading, then ideally you should spend an extensive period of time either through a program or looking back and dissecting the charts in the past and forming your own trading strategy. And so once you collect enough data, you will understand that, okay, your trading strategy has a certain probable edge over a long period of time, and therefore you will trust it more. And so if you trust it more and it's your own trading strategy, well, now if you encounter a certain losing streak, you won't freak out as much because this is something that you control and you have data for. Because if it's something that you don't have data for and you're trading something that isn't back tested or isn't your own strategy, well, then you might feel a bit fearful when it comes to taking that trade. And now for the fourth point, when it comes to the fear of past experiences, we need to understand that the past doesn't always replicate into the future. And that's because if you are someone who first started trading and had horrible risk management and you were trading money that you couldn't afford to lose, and maybe you blew multiple trading accounts and simply you didn't have enough experience as a trader yet, understand that just because this happened to you in the past does not automatically mean that you're going to go down this slope in the future, especially if you have a better trading strategy and you have a more realistic expectation. But if this does keep happening, then we need to be more mindful under stressful situations. So what you should do at this point is not only should you have a trading plan that you journal through, but you can also have a plan when it comes to certain situations in the market that induce this feeling of fear. So maybe if you fear entering a trade after a volatile movement, but maybe this entry agrees with your trading plan, well, then you need to keep reminding yourself during these stressful moments that it's okay to follow your trading plan and that you're basically reacting based on past experiences. And so what this also might tie into is starting small. So maybe in the past you started trading with too much money, and so now you have this big feeling of fear. Well, then in this case, you might have to start small with either a demo account or a paper trading account until you work your way up through confidence. So once your confidence goes up and your feeling of fear slowly goes down and you follow your trading strategy, which is very important, well, then in this case, at this point, these past experiences won't be as significant for you anymore. Now, for the last point, when it comes to the fear of missing out on trades, what's important is to not chase the markets and to be patient. So patience is incredibly important, and this is a skill that will naturally develop over time. So in the beginning, you might have an unrealistic expectation about how quickly you want to become profitable over a long period of time. You will chase different trading opportunities and you might not follow your trading plan. Whereas otherwise, if you were following your trading plan, then you wouldn't have this fear of missing out anymore, because you understand that, okay, I might have missed out on this trading opportunity, but there's a good chance that if I enter now, it's too late. So I'm going to avoid the hype and I'm simply going to stick to my strategy and wait for the next probable opportunity. So I hope you guys found this video helpful. If you did, please drop a like and let me know if you'd like a part 2 of where I dive more into trading psychology and and the mistakes that a lot of traders make. And for those that want to join my trading community, the links are in the description to the Discord app and the Telegram app. Thanks for watching. I'll see you guys in the next one.